of questions already lined up, and I want to answer as many of them as possible. So Travis says, Mark Minervini mentioned, so for those who don't know, Mark Minervini is a personal friend of mine. I actually had him on our YouTube channel yesterday live. The replay will come out just real quick after this at the time that I'm recording it. We're doing a champion trader series. So I'm competing in the US Investing Championship, and he has won the US Investing Championship twice. And so I was thinking, you know what? I should probably learn from a champion what it takes to be so. So I had a chance to talk with Mark yesterday, mentioning getting out of a stock once it's acting abnormal. If possible, can you expand on what abnormal means in terms of your trading strategy philosophy? Thanks. I think that's a really great question. And in fact, Mark did, he spent more time talking about what abnormal means. And for him, it's in his strategy, right? His way of making money in the market. If a stock is not doing X, Y, or Z, that's not normal. And as outliers, we like not being normal, but we don't want our stock to be acting not normal, right? If our stock is not doing what we want, we need to move out of the way. So first, it's establishing what does that normal, that baseline look like. And I think that it really comes down to, rather than saying it needs to go X, Y, or Z percent before, X days, say, okay, if for any reason at all, and this is why we have a myriad of exit signals. In fact, let me pull those up real quick. This, in my opinion, is why, not Richard Dennis, that's not why. This, in my opinion, is what it would look like if it's not acting normal. If you get a sell signal, 10-20 bearish cross, runs through an outlier block, earnings, a gap and crap, or it hits your stop out points. That to me is not normal. So if it hits one of these, it's time to go. So don't overcomplicate it. Figure out what the exit signals would be for you, and then that's your answer. If it's not acting right, it might be time to go. Do we really need the 50 EMA? No, but it helps because you've got your 10 EMA, which is short term, your 20 EMA, which is intermediate term, and your 50 EMA, which is longer term. You could break that down to the 5, 10, 25. Sure, why not? You could cut them all in half, by all means. The reason that we do the 10, 20, 50 is for consistency's sake, right? Figure out whatever moving averages you like and just use those for the rest of the time, right? But don't say I'm going to use the 10 to the 5, 10, 25 on Monday, and on Tuesday be like, man, never mind, I'm going to use the 10, 20, 50, and then on Wednesday, nah, never mind, I'm going to use the 200 day and the 15 day. Oh, never mind, I'm going to go back to the 5, 10, 25. You can't do that. You got to stick with it and stay with it, right? Because reason being is that you have to have a reason for these changes. You can't just change things willy-nilly. I mean, you can, and that's why a lot of people screw up in the market, is because they have in the Trading in the Zone book, the greatest trading psychology book that there ever was, written by Mark Douglas. He says you have unlimited opportunities to do unlimited things in the markets every single day. That is one of those opportunities to do an unlimited thing, which is changing your trading plan willy-nilly. When you change your trading plan, you need to look at it from two instances, right? First circumstance is there actually a flaw in my plan? If there is, maybe changing those moving averages makes sense, but you have to go and prove that. You can't just say, oh, I lost on it, I got a flaw in the plan, I need to change everything. No, not at all. Is there a flaw in the plan, or did I just get an unlucky streak, right? Did I just hit an unlucky patch, right? You need to be able to quantify which of these two things is happening. And then you can build rules to make sure that you don't have those flaws in your plan anymore. But you unfortunately can't build rules about being lucky or unlucky. That's just part of being in the market. YouTube DC333. Love listening to Chris and Mark yesterday. Wish Mark would have talked a little bit more about his entry and exit points. We specifically didn't talk about that. That was intentional. In fact, afterward, we were talking, he's like, Chris, thanks for not going into all those little things, like what moving average to use and stuff like that. That was not the point. The point was to get to the mindset. What does it take to be a champion trader? Because anybody can tell you any moving average. Anybody can tell you any exit point or entry point. The key, and you'll hear that in the replay, is consistency and discipline. The key is consistency and discipline. And nobody can teach you consistency and discipline. That is what it takes to be successful in the markets. And Richard Dennis will tell you exactly this too, my friend. I always say you can publish the rules in a newspaper and nobody would follow them. The key is consistency and discipline. And Mark mentioned that many, many, many times. You need to have the consistency and discipline. So in that case, Mark has many, many videos on YouTube. It's really not that hard to find, talking about his entry points and exit points. But that wasn't the objective here. Okay, Enoch, my friend. Of course, I've seen Mark's rules. Everybody has to make their own rules and then trade those rules. Now, Enoch's rules are going to be different than my rules, and that's fine. And in fact, I don't want Enoch's rules to be the same as my rules because I wouldn't be able to trade Enoch's plan. Enoch wouldn't be able to trade my plan. So for that reason, of course, I've seen his rules. Who hasn't seen his rules? They're on the internet all over the place. Come up with your own plan, trade that plan, because nobody's going to make a plan good enough for you as you did. What time frame do you use for your long-term retirement accounts? 17 days. Probably is not the answer you're looking for, right? But as a high net worth individual, right, you're going to have things all over the place, right? I have investments in real estate, I have investments in Ovtlyr, and I have investments in the stock market. But those investments in the stock market, all stocks are bad. Every once in a while, they act right. So I'm not putting anything in the market long term because all stocks are bad. All of them are bad. Every once in a while, they act right. That is my answer. I don't have a long-term portfolio. I have a portfolio of stocks that are working when I set up and I get in and I get out, however long it takes. Mikey Mike, the market maker, says, what did Mark mean by having a mirror account at another brokerage? Dude, I was so glad he mentioned that. That is one of those like life hacks that I've heard about, but I hadn't ever like used. So for example, let's say you're trading, round numbers here. Let's say you're trading $1 million in your normal account. Let's say you can't access your normal account. Let's say Amazon Web Services goes down and you cannot access your account. And that has happened late last year. Amazon Web Services went down and it took down a lot of the internet, including Tradier. Like I tried to do things in Tradier that day. And I was saying at the time, man, if I had money at risk, I would be pretty pissed right now. So that mirror account is exactly for that purpose. If you're long a stock and you can't do anything in that brokerage, you're completely locked out for one reason or another, you can then take an opposite position to offset whatever risk is happening, which actually is a really good idea. Plus, if you're looking for SIPC or FDIC insurance, that helps with that as well. So Minervini's plan is quite different to your plan. Is it though? Is it though? What's so different about it? What's so different about it? We're both trying to buy stocks that are moving like crazy. That is the answer. I don't think it's all that different at all. We have different pieces of the puzzle, but we're still trying to put the same puzzle together. Why do you think Mark and Norm are big poker players? I think they like the thrill. I think they like the game. And that's the best part about trading to me, which is the game. Chris, do you think Mark could share anything that we may want to backtest for ally improvements? So we did make I wouldn't say a lot. We made a few enhancements to the plan from what Lex had said. Based on my conversation with Mark, there was nothing that I wanted to change in my plan based on that conversation. I mean, really, it came down to having a plan, executing it with consistency. And even though you're in the US Investing Championship, that doesn't mean you need to abandon the plan. That means you actually should probably double down and not screw up. So my answer to that is I didn't see anything that I wanted to implement into my plan for changes. Great question, though. Really great question. Mark, talking about Mark, did Mark mention something about trading that you don't do, like taking risk off or adding more during a trade? So Mark is a big believer in selling into strength, right? And for him, he's going to have whatever that level is, whatever that reason is. And Mark's a lot more discretionary than I am. I don't mind selling into strength if it hits one of my exit signals. Right? Let's go to plan name real quick. I mean, legitimately, an Ovtlyr sell signal or an order block or earnings, all three of these are selling into strength, assuming that it's moving up on that day. A 10-20 bearish cross or a gap and crap or either of these stop out points, those are both selling into weakness. Would I love to add more selling into strength? Yeah, of course. But the issue with selling into strength, and let's go to SoFi as an example. The issue with selling into strength, remove this, is that if we add in, for example, the value zone indicator, when it pops 3 ATRs over the 20 EMA, it lights up here with this light green color. When it's inside the value zone, it's this dark green color. This is the issue with selling into strength. Yeah, it's going up, but you're taking risk off the table as it's still working. And if you're selling it for only the fact that the price is going up, you may be left in a situation where the price continues to go up, maybe another 20% without you, because you want to sell into strength. So I'm not saying I'm right. I'm not saying Mark's wrong. I'm saying that that is something that he does do. And I would love to do more of that, but I need a quantifiable exit point to do with it. YouTube DC333 says, I ordered one of Mark's books after listening to Chris and Mark yesterday. Very impressed with his humility. Did anyone else? Dude, you may not have heard of Mark before. Mark is literally one of the greatest traders of all time. Like, actually one of the greatest traders of all time. So, I am a student of the stock market. I love to study the past, right? Because timeless principles in trading have applied forever. And it's kind of a, if you want to be successful in the market, you got to you have to study the people who have been successful before. It would be equivalent to saying, I want to be a professional basketball player. Who's LeBron? I want to be a professional golfer. Tiger who? I want to be a professional snowboarder. Who's the flying tomato? Right? Things like that. Like, if you're going to be successful in the markets, it behooves you to see who has been successful in the past and learn from them. Learn from them. That's what I did. That's why I'm successful in the markets, and that's what I try and share with you. Were you surprised Minervini doesn't trade out? No. I know he doesn't, and that's okay. That's what he does. I don't know if you caught that part in the interview, but Mark and Larry Height are good friends, and I worked with Larry Height, and Larry Height specifically taught me how to trade options. And that's the cool thing, right? Is you can pick and choose what works for you from whomever your mentors are, and you can find your own success in the market. Junior says, I got from Minervini's interview that he thinks his book on mindset and psychology is the most important one. I have that book. I have all of Mark's books, but I don't remember where I put it. It may be right here, or it may be over here. Hold tight. I have my books separated by topic. Mindset Secrets for Winning. I know it's right here somewhere. Great content, Chris. I know. Where is it? You know what's going to happen is I'm not going to find it. As soon as I stop recording, it's going to be the most obvious book ever. I have no idea where it is. Hang on. Let me look at one more time. Mindset Secrets for Winning. Yeah, I got no idea. I don't know where it is. But yeah, that's a good one. He loves that, and it really is important. In fact, if you go onto my YouTube channel, let me show you this real quick. If you go onto my YouTube channel, hold on, 2 seconds. Gotta log into YouTube. If you go onto my YouTube channel, you'll actually see previous interviews that I had done with Mark in the Market Wizards playlist. And when I was prepping yesterday, I was listening to them as well. Mindset Secrets for Winning. Mark and I had a whole hour-long conversation that is on YouTube specifically about his book. So yeah, even though I can't find it, trust me, bro, I read the book. Did Mark win the US Investing Championship trading only stock? Yeah, but he did trade with margin when he needed to. Margin meaning that if you have, for example, $1,000 at your brokerage, they will actually allow you to go potentially up to $2,000 in stock purchases. But just remember that is adding leverage. And was he competing against people who are also using options? So there are different divisions. There's enhanced growth division, which is where I'm in, which does allow futures and options. And then there's the stock only division, and he was in the stock only division. Stephanie Brown. Chris, did you boys talk after you finished your live interview? Did you share anything? Oh, yeah, dude, I'm telling you, Stephanie, it was awesome. It was so great to catch up with Mark. We literally talked for an hour. I gave him a platform tour of Ovtlyr. He gave me a platform tour of his software called Minervini 360. We talked about Rolexes. We talked about his race cars. I didn't know this, but he's also a car collector. He said he has 15 cars. So it was awesome. Really cool. And Joe was there helping run everything, make sure everything was smooth. And Joe just got to be a fly on the wall while Mark and I just went to town for an hour. It was really great. Don't we sell into strength when rolling? Yeah, we kind of do. That's a great point. We are selling into strength while rolling. We're taking those profits off while we can. You know what? That's a great point. We're already doing that. Well said. Thank you for that. Gold star. How is it possible to be very profitable in the market when traders do not use options? Same thing, right? It's the same thing. Options provide leverage, but that doesn't necessarily mean that they will be more. In fact, you can be significantly less profitable by using options. It's really down to executing a plan with as many frequency as possible, as much frequency as possible. Chris, I've been away since Christmas. Where have you been, Rogers? I've been missing you, dude. I would like to know where I can look to see how everyone is doing in the U.S. Investing Championship. So you go to financial-competitions.com. And I believe the Norm was saying that the results go up on the 23rd. Today is the 20th. So sometime next week. This is the 2025 final standings. So there's different divisions, of course. This is Bob Weissman, which is Mark's assistant. He won the enhanced growth division in the $1 million plus category. How cool is that? He didn't even know. And that was such a funny story. He said Bob had entered without him even knowing. And then he ended up winning without Bob entered without Mark knowing, and then Bob ended up winning. That was pretty cool. Financial-competitions.com, and then it updates from what I understand on the 23rd. And Dr. Zada, we were talking after the show, and he's like, yeah, there's a bunch of outliers on this list. And I was like, oh yeah, that was the plan. We want to get as many outliers as possible in there. Linda says, as an asset price increases while using the same ATR values, do you reposition them to the new higher price or leave them at the same entry price, meaning the ATRs? We talked about that earlier on, and the case really is that I set the ATR at entry and I don't touch it again. Can you? Of course. But that's one of those like super detailed, pedantic level of detail that I just don't do. But that doesn't mean you can't. Doesn't mean you can't. Rock says, while I'm in plan sit and cash and don't F up, how come the buy and sell signals are not followed for entry and exit as indicated by Outlier? Well, okay. So if you are in the sit and cash and don't F up plan, then you're not looking for any entry or exit signals. You're waiting for the market overall to say, okay, the market is more conducive. And I get it. A lot of people are impatient and they don't want to sit in cash. They don't want to sit in cash. And I understand. And maybe that's where you're coming from. I don't want to sit in cash. I want to trade something. But here's the deal. The market does not work for you all the time. You don't get to pick when the market works, right? You have to sit in cash for proper setups. How long? As long as it takes. And it can be super boring. It can be super frustrating. But the point here is that it doesn't allow you to F up your portfolio. Now, Rock, I don't know you from anybody. I don't know you if you're a big 6'5", 394-pound bodybuilder like The Rock, or an itty bitty baby hand boy like me. If the market is not setting up, the best thing to do is not F up your portfolio and sit in cash. Sitting in cash is a risk-free option. It does allow you to earn interest in whatever account that you choose to earn interest on. And because of that, you can keep yourself out of a lot of trouble.